Hi Chakits, I have been following you and watching your YouTube channel for years.
I have decided to finally relocate to Las Vegas and want to start a new chapter in my life. I know you're the perfect realtor to help guide me to find my next dream home. I am looking for a modern kitchen, large backyard with a pool and a golf course community.
My name is Chakits Krulsawat with Simply Vegas, a licensed real estate agent out here in Las Vegas, Nevada. I help buyers like this all the time, so if you're looking for a licensed professional, give us a call at 702-319-1092 or visit lvhomeexperts.com. Buying a home starts here. Is your credit score holding you back from purchasing a home? GC Credit Coaches is a repair company that's made easy. Their goal is to challenge and remove all negative errors that hurt your credit score. On average, GC clients see about 10.2 negative items removed over 4 months. Start improving your credit score today with a simple 2-minute online enrollment for a free consultation and a complete credit audit. GC Credit Coaches offers competitive monthly pricing, no contracts, no hidden fees, and the service stops once you are satisfied. GC Credit Coaches removes inquiries, collections, charge-off bankruptcies, and repossessions. Don't forget to visit gccreditcoaches.com.
Attention contractors, remodelers, and homeowners. Is your renovation becoming a pain in the glass? Here at Glass Vegas, we take care of all of your glass needs. From a broken window to custom shower doors, mirrors, wine enclosures, storefronts, railings, and much more. We can even help you with new or replacement thermally broken windows. We're a full-service, woman-owned glass company that provides unparalleled workmanship, excellent communication, and great customer service. Glass Vegas. We do glass with class.
And welcome live to the LV Home Experts Podcast. This is what we talk about real estate and financing and what's going on with the Las Vegas market. Every Wednesday at 4 p.m. Pacific Standard Time. If this is your first time tuning into this podcast, my name is Chakits Krulsawat with Simply Vegas, the host of the LV Home Experts Podcast. Today we have a very special guest, and she has been a real estate agent for some time, and now she's a loan officer. Well, actually, technically, now a recruiter. So we're bringing her on the show today, and we're going to be talking about today, right? Jerome Powell have just raised rates by a 1/4 point. Now we are at 5%. And how does this affect the Las Vegas housing market? So I want to introduce you guys to Kandy Katz. What's going on? Oh, sorry, forgot your mic. I apologize.
You're good, brother. I knew you weren't ready to get me on, but I'm so excited to be here.
I know. You have so much energy, and that's the reason why I wanted to bring you on the show today.
Thank you,
like,
thank you.
You have so much energy. You're like one of those people that come into the room, and you have that aura. Like, you know what? I want to get to know this person.
Aw.
So that's a good trait to have.
Thank you. I'm going to give you a hug.
That's okay. After the show. Let's pull up that mic a little bit closer. Can you just move that? Yeah, there we go. And just let it go.
Make love to the...
Well, you don't want to make love to the mic, but hold on. That's my fault. So let me make this adjustment for you.
Cool.
Right there.
Boom.
Okay.
We in business.
Now we back in business.
All right.
Okay. So let's talk about this. I want to give a quick shout out to Vera and everybody that is on the comments. I just want to say thank you. I want to talk a little bit about you so that way my subscribers can get to know you a little bit better, okay? I want to start off with, how long have you been in the real estate industry?
Well, without exposing my age, but no. Actually, I got in as early as 2004.
Okay, 2004.
Yeah.
Oh, so you got in when the market was hot and was about to roll over and crash.
You know, I got in not knowing what I was getting into, to be honest with you. I graduated with an IT degree, okay, computer science, and the market wasn't the best at that time to get into technology. So I attended a job fair and shook hands with my first manager, and she's like, let's go sell some mortgages. I'm like, what is a mortgage? You know, like the whole term itself, right?
Yeah.
It sounds morbid. It sounds like, oh, I'm selling coffins or something like that. I've shared that story before. But yeah, I got in and haven't left since. So,
Okay.
yeah.
And how long were you out in Dallas?
So I'm originally from New Orleans.
Okay.
Born and raised south of, in a small town. We had a
Is that where all the edginess is coming from?
You know, I don't know what it is you're picking up, Chuck,
Yeah,
but
yeah.
At this Chakits, but at the same time, you know, I
Yeah,
guess.
Cat. Inside joke for everybody.
But you know, maybe I get a little bit of that Southern twang. I get
Yeah.
a little bit of that Asian accent. Who knows? But at the same time,
There's no Asian accent.
hardly?
Not at all.
Lost it. Never had
Yeah.
it. Never had it.
You like to do my nail?
Whatever you like, honey.
I make you pretty.
But yeah, so born, raised New Orleans.
Okay.
Katrina happened. I was in real estate at the time, relocated to Dallas and continued doing loans. The market crashed in 07, 08. Got my real estate license. And it was tough. You know, it's definitely not what we've been seeing these last 10, 15 years. But I'm so glad I was able to get the license, learn the business, and just there's so many facets, right, of this industry. And I think it just makes you more well-rounded and be able to relate to a customer, client, whoever it is, to help navigate through the whole process. So from Dallas, I met my now husband.
Cool dude, by the way. Give a quick shout out.
Yeah.
Very nice guy. You know what? I first met him. He literally came up to me and we just had a full conversation. And there's something about him too as well, that he has that aura too, where he's just a good person. Like I could just like tell he's legit. You know what I mean? And you don't get that too much here in Vegas, it feels like.
Yeah, thank you. That means a lot because, yeah, I've been very fortunate and blessed to meet him, and he's my rock, and I mean that. So.
Well, I can tell. I can see that rock on your finger there.
Yeah. And then so from Dallas, I moved to Denver, which is where he was.
Yeah.
Continued real estate then, still lending, and opened an office for the company that I'm with now. Started that market and relocated to Vegas. We've just been here for about a year and a half and effing love it.
Okay,
It's been a hidden gem.
So you've been here, Vegas, now for a year?
Little over a year, going on about a year and a half now.
Okay, and what's the name of that company?
So I'm with Absolute Mortgage and Lending.
Okay.
We're headquartered in Dallas, and we're active in about 25 markets right now and growing. The goal is to be licensed in all 48 states, except for New York and Alaska.
Okay, so you guys do residential and commercial loans, is that correct?
That's correct. So
Okay.
we cover the whole gambit from residential, non-QM is our a big space that I cover. We can touch on that. Commercial, land, SBA.
Okay, so, I like the SBA. Now, it says right here on your title, corporate recruiter. So are you still doing loans?
Yeah, good question. So with my transition as a corporate recruiter, hybrid marketing, I have a dedicated team that handles my production. Now, granted, a lot of the content that I push out is educating and informing my audience on the latest products, success stories, failures, and I have a dedicated team to handle my production. So I'm still originating per se, but not the level that I was because of my current position.
Okay, and do you currently own a home here or are you currently renting?
Oh, we own. Yeah.
Oh, nice. When did you buy your home here?
A year and a half ago. It's crazy. We were coming out to, what is it, Utah. I'm drawing a blank right now on Zion.
Yeah.
We were going out hiking, and we passed through Vegas on our way back. But before flying home to Denver at the time, we wanted to check it out. You know, we learned, okay, is it SUMMERLIN? Is it Henderson? We're not excited. We knew we weren't married to Denver, was ready to move. But before flying out, we were like, let's check out one more pocket. And that's, I hate to say it like that, but we live with the seniors. And it's amazing. So out in Lake Las Vegas.
Wait, you live in age-restricted community?
Well, it's not 55 and up, but the area is, known to be the retirement community, right? You make out some time.
Oh, I just want to give a quick shout out to Chris for the super chat for $5. He says this: buy a house today or get married to a bottle girl I met. Oh, we're not going to go down that road.
Oh, no?
Yeah, we're not going to go down that road.
You can't start and not finish it.
Yes.
We'll defer to that later.
Yes. Sorry, Chris. We're not going to play this game and go down this road. Ask another question and we will go ahead and answer your question. So where was I before I got sidetracked with this $5? But Chris, thank you so much for the $5 super chat. It means a lot to me. So what we're going to do is we're going to take that money on all these super chats that we get. We're just going to donate the money. Okay. Where was I going with this?
So we're out in Lake Las Vegas. You're like, wait, you're in a 55 and over community.
Yeah.
I'm like, no. So,
Okay.
yeah. So to answer your question, we dialed it in. Basically, when we saw Lake Las Vegas, we were like, all right, this is the reason why we would move from Denver to here, right? Of course, with all the other things considered, like Vegas, super hidden gem. For those out there, I'm not just selling it. This is home. We're excited that we're planting roots here, and just the community. I mean, when you commended us on our vibes, Chakits, I feel everyone here has been so welcoming, so helpful, and I think everyone wants to see you succeed.
Why you gassing me up right now?
No, real talk. And I'm like, that's what's up. You know, it's all about creating that community. And I can't speak about, I mean, maybe I should be hush-hush about it, but that's not fair.
Yeah.
You know, but so at any rate, as far as when did we moved out here and the house was ready. We were staying actually at the West End for about a week before it was wrapping up, you know, COE and everything. Is it COE? No, that's close of escrow. What is it? What is the certificate of
occupancy?
Occupancy.
Okay.
COO.
Now let me ask you this, okay? From your perspective, right? Give me an analysis of what's going on in the housing market today in Las Vegas from your perspective.
Yeah. So prior to moving here, what attracted us to the Vegas market?
Oh, wrong button.
Oh my goodness.
$2 super chat. Thank you again, Chris. I do appreciate that. So again, we're going to donate that money to Super Chat. So I appreciate it. I don't know who we're going to donate it to, but we'll definitely donate the money. Thank you very much, Chris. Sorry about that. So every time somebody donates money, we hit the button and we all scream.
I wasn't ready.
You wasn't ready. I know. I do apologize.
Delayed.
So, yeah. So let me get your perspective of the current Las Vegas housing market.
Okay. From my perspective, what motivated us to move out here, and this will answer your question, is I saw how attractive this city, the state is on a lot of levels. You know, the no state income, the affordable housing. We left Denver because their median price at that time was like $750,000.
Wow, so that's high.
It's hella high. And so, you know, when we were thinking about building, because we like buying, build, live in it, rent it out, kind of wash, rinse, repeat. And that's how we build our portfolio. So with that said, is the house that we were looking to build in Denver just did not make sense. We would have to have lived an hour north, away from everything, and that's before any upgrades and such. So really, sticker price would have been like $900K. And so moving here, I saw the opportunity as an investor just on RALs, you know, the residential assisted living. I thought there was a big opportunity for that. There was a lot of attractive, sexy things from all of the sports and just you're close to the Northwest. I mean, here nor there, as far as to answer your question, I think there's so much growth. It's happening again.
No, I was just doing something. Go ahead.
I feel that Las Vegas is going to be very strong. While it may have had a hit in 2011 or what have you back then, I think it's just on the come up and only going up. So even with rates going up and things of that nature, that's not going to impact people wanting to move into this state for a lot of the reasons that we've already mentioned.
Okay, so let me ask you this. When you closed on your home, would you guys end up locking that?
Ooh, it was sexy. It was like 2.25.
Damn, that's low. That's even lower than I got. I thought I was the shit.
Yeah,
mine was at 3.2, and I thought I was the man.
You didn't call your girl up. That's
dude,
what's up.
And I played the game.
You did? What
does
that mean? Tell
so
us
basically,
more.
on my first deal, right, I bought a bank-owned property. It was an FHA.
Okay.
And my rate at that time was like at 5.2%, right? As the market started creeping up, what I did was I refinanced it into a conventional loan. Okay. I waited until the rates dropped.
Good for you.
And it dropped down to about 3.2. I played the game. I was in an equity position. I went from $1,600 all the way down to like $930.
Amazing.
And I've been there ever since. I mean, there's nowhere to go.
Dude, that's incredible.
Yeah.
Wow.
So, I mean, real estate, it just comes down to playing the game. And if you understand the game, you could literally pivot and always profit, right? The only thing that's bad about real estate, you can't get out quick, right? Because it's a solid asset to the point where if the market tanks, nobody wants to buy.
Right.
That's
but
one
it's
of the
a whole
problems.
game at that time.
Yeah, exactly.
You know?
But I already knew I was going to be in the property for like, 10, 15 years. But, we have such an equity position right now. It doesn't make any sense for us to move anywhere because I could take that money and I'd still be paying the same amount for pretty much like the same kind of home. It just doesn't make any sense whatsoever. So for me at this time, I would rather just go cash heavy, keep stacking and just keep my costs very low and just live a comfortable life. But however, I'll splurge. Do you know what I mean? Obviously, you work so hard. There's certain things in life that, you want to make things easier for you.
Yeah.
You see what I'm saying? I just don't want to be house broke. But talking about house broke, right? Especially for all the first-time home buyers out there, okay? I want to talk a little bit about the debt-to-income ratio. To live comfortable today, especially the average household income here in Las Vegas is about $68,000, depending on where you pull that data, right? Where do you say that threshold is where somebody should not go over? Because I've seen people leverage themselves out to like 42%, 38%. I feel that's a little bit, I don't want to say it's a little bit too high. I'm going to say that's very high.
It's still high. You're right. I mean, even with me being in the lending space and there's, to your point, there's thresholds in place for you to stay under, but doesn't mean that you should be maxing that out. To your point, I don't condone the idea that you should be house broke. I mean, you bought the house you love, but then you're eating ramen noodles or you're not able to go out and enjoy the city that you moved to. So in terms of like number, I mean, if I had to put it out there, I think even something in the range of like 28%, something like that, 30, just so, because what else do you have? You have a car loan.
Yeah.
You have credit card debt, which is very common in this market that we're in right now. You have to, account for that in those cases. Maybe room where if you are looking to build a business, you want to keep all of that minimal as possible. So if I had to say, 28 sounds low, but again, it can range for the individual.
Yeah.
How much you want to flex, how much home you want to buy. And honestly, I'm with you. When we moved here, our mortgage payment didn't change aside from the HOA, the Master Association, increasing. But other than that, we got a bigger home, a yard, and because we got in at a good rate, we didn't change our payment, but we won overall, from no state income tax and all those savings. So I think it just really depends. And that's why I think it's important to sit down with a lender, whether you're ready today or 6 months from now, just so you can be able to get into a comfortable payment and budget yourself so you can work towards that goal.
So what do you say with all the families out there that are making, $68,000 a year? They have a car payment, they have kids, but they're like, just saving, because we know that about 85% of Americans, they're literally like 2 checks away from bankruptcy, but they want to get into a home. Like, what do you say to those people, right? Because I feel like there's a lot of money that's coming in from different states. I mean, I'm talking about East Coast, I'm talking about the West Coast, California, people from Hawaii. They're coming in and selling their homes and coming out here, paying cash. And what happens is the people that live here, that is living, paycheck to paycheck, they're barely scrubbing by. It's hard for them to get a home. Like, what do you say to those people out there that want to get a home?
Yeah, there's a few things. I come from an immigrant family, so we had nothing. We had to borrow money from family to get into a double wide trailer. Actually, I've never really said that on social media or in the public, but we didn't have anything, but we built from there, right? It all starts with the first one. Yeah. And to your point, the whole equity, just the gains that you will get from purchasing a house and reallocating it or whatever. But to answer your question, it's still very possible. 68,000 is comfortable. I think it just depends on your lifestyle. It's what is your means? Are you going out to eat and doing lavish things all the time? Of course, that's not going to equate to a house, but at the same time, it's no different. If you're going to be spending that money on rent, you're always going to be in that position. Yeah. So I think it helps to guide someone in that position that feels that there's no opportunity when there is, because there's down payment assistance programs where you can come to the table with nothing out of pocket. Yeah. And a lot of people don't realize that you can, if your goal is to keep your mortgage or rent at $1,800, let's see what that looks like. Get into that townhome, a condo to get started, and then we can build up from there. So I think that's how I would approach that, and just really encourage them that there is possibility, because I help people that makes less than that much money, right, get into homes, but because they save or they're not living above their means, if you would.
Now, does your company have like some sort of like program to help kind of like budget and kind of see where the consumer will be in the next 5 or 10? I don't want to say 10 years. That's a little bit too long. I guess my point that I'm trying to ask you is that, do you provide some sort of service to the client to help them and point them in the right direction to start saving, so that way they can see the light at the end of the tunnel? Because sometimes when people realize, you know, hey, it's hard because I just can't make that payment, right? I'm living paycheck to paycheck. Do you guys provide something like that, like some sort of service where like you can help somebody out? Do you know what I mean?
Yeah, I hear you. Not necessarily on a platform or any type of software application, but at any rate, whenever I do speak to someone for the first time, I think that's where that consultation comes in. You know, are you expecting a raise? Are you going to be, getting promoted anytime soon? Are you going to be getting married? Whatever life changes is happening, because then we can now combine forces. Are you looking into adding a co-signer? Whatever direction you need to take to leverage off of someone first and maybe refinance 6 months later. But I think just the initial consult is what I enjoy the most, because you have a full spectrum of their finances, their debt, and then you can guide them accordingly, right? Because without that, there's just too many variables. And that's a good point, though. I think because there's this nonprofit that I've been lobbying the idea of starting of financial literacy. That's non-existent in our...
and I think that's important, because what I've noticed is like some lenders that clients will speak to, once the lender finds out that, okay, they make money, but they just don't budget their money, well, right? They can only save a little bit, but they're like 4 or 5 years out after pulling their credit. What tends to happen is you never hear from that lender again, right? The lender just says, hey, do this, and lender never calls back. Next thing you know it, that person that wanted to buy a home just kind of falls apart, right? Because they don't see that light at the end of the tunnel. There's no accountability. And that's one thing that we do as real estate agents, especially with our team, is constantly follow up and do the accountability. After we send the clients, like just say to you, we know what the outcome is. We know how long it's going to take in order for them to get approved, right? We're going to know exactly how much they would be approved for. So now we're putting, the pieces together like a puzzle. Now we have this roadmap. But at the end of the day, one of the things that we do is the accountability factor, where we always do the follow-up. Hey, did you save this much money? Where are you at? What's going on? And I think that's very important, because, like I said, a lot of times, agents are also guilty of this. When they realize that the buyer can't buy, they just never call them again.
Sure. Yeah, that's where in business practice, right, where you put them in your CRM and hopefully follow up in 6 months, 9 months, just even as a check-in. So I'm with you.
Now, you did mention earlier something about if you didn't have any money, that a family could give you money. So how does that work? Does it have to be like a family member?
So I guess when I say that is when it comes to lending, quote unquote, gift funds are allowed by family members, right? So it doesn't matter what is that family member, a cousin? Just by paper, we have to say that it's family, because it's a letterhead that we include in your paperwork to support with the underwriter to basically give their blessing and approve that the funds are in fact there. And so the family member could be anyone, for that reason. But yes, if you're buying a primary residence, going conventional, gift funds are totally allowed. 100%.
Now, how much of a gift fund can you actually give? Could you give the down payment and also the closing costs as well?
So the down payment has to be actually met by the borrower, right? So in essence, if we're doing an FHA loan and 3.5% is required, that's going to be required by you as the borrower to have in your account, whether it's your 401k, things like that. Now, if someone's gifting you $30,000 and that covers the down payment, just by paper trail, you're still showing that, hey, I am able to bring the 3.5% down, and the rest is covered by gift funds to cover the closing costs, fees, and things like that.
Now, is that also with conventional at 3 and 5 and 10% down as well?
That's correct.
So the only thing that you have to come up with is just the initial down payment, but the closing costs, you can get that gifted.
Yeah. Well, no, you can have even more, like just because the conventional loan minimum down payment is 3%, but if you want to put 20% down, you can accept all of that as a gift.
Oh, really?
Yes. So you just, because a conventional loan requires you to have 3% down, or maybe this is your second time taking out a conventional loan, is 5%, right? So long you have that in your bank account, you can prove that you have those available funds. You can have how much ever, like if your loan is $500,000 and you want to receive $400,000 as a gift, you can, to buy the, to decrease your loan amount.
Well, that's great information. All right, guys, we're going to be right back after this commercial break.
No.
Does your house look like and have you been considering remodeling your home for some time now? Well, if you love real estate like I do and appreciate the attention to detail in the craftsmanship required to build a remodel or a gorgeous home, then I got the perfect company for you. Guys, I highly recommend Design Zone Remodeling. They are a stellar company that will turn your outdated home into your own personal sanctuary. They specialize in bathroom remodels, kitchen remodels, and full house remodels. Design Zone Remodeling has a reputation for excellent workmanship, competitive fees, and being able to offer a wide range of services and deliver the outstanding results to their clients. I use Design Zone Remodeling on my personal properties. Give Design Zone Remodeling a call today at 725-223-0871 or visit their website at designzoneremodeling.com to request a free consultation today. Is your credit score holding you back from purchasing a home? GC Credit Coaches is a repair company that's made easy. Their goal is to challenge and remove all negative errors that hurt your credit score. On average, GC clients see about 10.2 negative items removed over 4 months. Start improving your credit score today with a simple 2-minute online enrollment for a free consultation and a complete credit audit. GC Credit Coaches offers competitive monthly pricing, no contracts, no hidden fees, and the service stops once you are satisfied. GC Credit Coaches removes inquiries, collections, charge-off bankruptcies, and repossessions. Don't forget to visit gccreditcoaches.com. And welcome back live to the LV Home Experts Podcast. This is where we talk about real estate and financing. So today our special guest, Kandy Katz. She is a commercial and residential lender. So if you guys need to get a loan, this is the girl to contact. That's right. All right, so we are back. So as you know, today, Jerome Powell has raised rates by a quarter of a point. And I talked about this last week on the podcast. And I had Shane, and I'm going to call Shane out right now. That's right. I'm calling you out, Shane. He had sent this. He goes, hey, Chakits, want to do a gentleman's bet that the feds are not going to raise rates next week? Well, $50.
Holla.
So basically, I told him, hey, man, send me a DM because I know that they're going to raise rates by a quarter of a point minimum. And he says, that's a deal. So, Shane, you owe me $50, man.
Time to collect.
Make sure to hit me up. I ain't playing.
Crickets.
Exactly. Let's see if he's a man of his words. I'm calling you out, Shane. And also, Shane, let's do some business too as well. All right. So I want to get right into this. We went from 4.75% to 5% today. How is that going to impact the mortgage industry? What are your thoughts?
Yeah, it definitely changes the landscape for sure. I mean, we all talked about it. You know, I hate to sound like a broken record. I preach this on my channel and on my social media, but no one wants to hear that negativity. You know what I mean, Chakits? But what it is they're not trying to accept the reality. And we all were suspecting rates to be 7-8% by the end of the year. And we're kind of on track, unfortunately. You
know, what's funny is I think people were thinking that way because of SVB banking, right? And it's funny. They were saying that the feds weren't going to bail out. Well, actually, the Treasury said they weren't going to bail out the banks. However, they did print another, I think, $200 billion. But the problem is that money's coming from us, which means more inflation. And inflation right now is at 6.4%. And the Fed's target rate, they want to get down to 2%, right? There's no way to get there.
No, not if they keep printing.
So the only way to get there is you have to raise rates. And the reason why they raise it a quarter of a point, because, you know, according to Jerome Powell, they're saying that jobs are still really good, right? People are still getting jobs. So that's the reason why they raised it of a quarter of a point. However, you know, there's going to be another meeting, which is, I can't remember the dates here. So the next meeting is going to be May 2nd to May 3rd. And I can tell you, based upon what's going on, they're probably going to raise it another quarter of a point. And a lot of people are about to be shocked here. Okay. Do you think loan applications are going to start to slow down?
So that kind of changes on a few levels for me. I work a lot with investors.
Okay.
So I haven't seen that slow down per se. It has, you know, the rates on those are sometimes really not a concern, because if the property is cash flowing, if it makes sense, that rate doesn't really matter to them. However, yeah, they're starting to feel the burn. I mean, but at the same time, I feel the rates where we are on residential is kind of aligning now to SBA and commercial loans. So we're kind of all we're on the same playing field. As far as the applications and things like that, we have seen, it just depends on the market, because I am licensed in 25 plus states. There's still multiple offers happening, right? Believe it or not, in your sweet price point spots of like 300-400K. I know that may not be existent in some markets, but at the same time, yeah, it's just going to slow people down from thinking. I think there's going to be a pool of the people that were on the fence and say, nope, I'm not going to buy. Or the ones that were on the fence, they're wanting to buy. They're like, all right, it's time, right?
Yeah, which is kind of crazy to me, because I noticed that for the past 15 days, I've got about 8 new escrows, and each one of them is under 450, right? And anything that's around like the 350 range, there were like multiple offers. And some of my offers, my clients literally had to pay for their own closing costs.
Yeah.
Because that's how strong it is, which is a little baffling to me. I mean, I'm not complaining, but it's just kind of weird, because real estate just moves on this weird cycle, like, and it's almost like it's psychological. And that's what it is, right? Because 90 days ago, it wasn't like this. 90 days ago, I was paranoid. I'm like, oh my God, I gotta readjust. We're dropping escrows, but we're back up to a bunch of escrows now. It's just crazy to me.
That's what I'm saying. Don't let the media feed you all of the negativity. I mean, there's a lot of always noise happening, distractions. And honestly, I think I stay so much in my bubble that so long I'm serving the community, giving them the answers they need and things like that, I don't think it's really affecting us. I think some people are sitting prettier than others. I think it's the ones that just got on in the last couple of years are feeling it, just because they haven't experienced a market like this. So, yeah.
Well, somebody says here, price is going to drop here pretty soon. Do you think home pricing will drop? Even further?
I think we're already seeing it drop, right? And it goes back again to the price points. Are we seeing it drop in the 300-400s? Probably not, unless something's wrong with the property. Now, unless you're in the more jumbo, higher balanced loans, I can see that happening. But at the same time, I think it just depends. I think the housing market was already inflated as it is. So the price adjustments happening is more so correcting itself. As far as dropping, you know, I think it would just be a case-by-case scenario, because if rates are going up and they have potential buyers, I think there's just room for negotiation to help offset the increase of 0.25% or 0.5%, things like that. So it just really depends.
So what advice can you give somebody that's kind of like sitting on the sidelines? Because on one side of the ear, you've got shit's about to hit the fan, things are not going good. You know, on the other side, you got a bunch of realtors. Hey, everything's great. Everything is great. Buy a home. So, like, what do you do? What do you tell a buyer? If somebody came to you and said, hey, I'm thinking about buying. I know I'm approved. I'm not too sure. What do you tell that person?
What's holding you back? I mean, you already know housing is a necessity. That's not going anywhere. You always need a roof over your head. So whether you're going to be renting, right, and you were like, oh, well, what if I don't live here? You're always going to make money. Listen, the first house I bought, to your point, I did 100% financing in 2005, okay? Now, it was 6.5 on the first, 7.25 on the second, and a couple years fast forward later, I refinanced, was able to reduce my payments down combined by like $300-400. But here we are, fast forward till 10 years later, the home appreciated $400,000 plus, right? So it went from $160,000 house to $450,000. That's what people need to realize, that inflation is real. We're not going to be able to get out of this deficit that we're in. And the housing, even though you feel it's going to go down or up, it's not by much, 20, 30K plus minus, let's say, give or take, right? But the housing is always going to appreciate. And if you get in now, it's only going to set you up for success, because look, if you do hold on to it, you can always refinance, take out the equity, you can sell and still gain, you can benefit on tax benefits. There's so many things, in my opinion, that is more advantageous to be a homeowner than not.
Okay, so, well, I'm going to be negative Nelly.
Okay.
I'm going to say, if you're sitting on the sidelines, you got to take a look at your whole financial situation, because they may not be the right time to buy, right? And if you're barely scraping by, right, you're probably better off just still rent, right? Keep stacking your money so strong. And you're in a position right now, you can kind of see what's going on with the market, right? So I would probably wait, because if you get into the market right now, because you're panic buying, you could be setting yourself up for failure. You really have to take a look at your financial situation. You have to take a look at the home that you are currently renting right now. If you were going to buy the same home, right, will your mortgage cost just as much as your rent?
If that's the case, then yes, that's when you consider it, because there's reasons why those parameters are put in place, though. Chakits, I'm not here to tell someone, if your debt to income ratio is at 50% and you are, if you're not going to get approved for the loan, that should tell you already right there if you're a fit. And then that's where you have to be a better advisor to your client, because you would hate for them to be in a position, to your point, where it does not make sense. But I don't see how renting also makes sense for anybody, in my opinion. And I'm not trying to say that I don't agree with what you're saying, but if they're already paying $2,000 on rent, why not put it in a house? I don't see how they can lose out, even if the house may not be the one they had in mind to purchase. But we all have to start somewhere, because that equity is going to pay them off later on.
See, the point that I'm trying to make here, guys, is that I really want you guys to really think about this kind of stuff, because, this channel was really based upon educating people and telling people what's really happening, right? And I'm not one of those guys that want to sell. That's not me. I'm the guy that's going to educate you, and I'm going to explain what's going on. But it's really to help you, and really for you to think about both sides of the coin, right? If it makes sense for your family, go ahead. If it doesn't make sense, then don't do it. And that's the way I work. However, like I said, I just want people to get educated, and that's why I'm going against the grain, right? Because I want people to realize both sides and make that decision. Now, I want to talk about the type of loan programs that you currently have out there for the first-time home buyers.
So the first-time home buyers really is, if you are taking advantage of the conventional route, which is the conventional loan, FHA, you can take advantage of the 3 to 3.5% down.
Before you get into that, what's the difference between FHA and a conventional loan?
FHA is backed by the government, and the difference in terms of what is going to be charged on interest rate, what is allowed on your debt to income ratio, the amount that will be charged for private mortgage insurance, PMI, will vary from a conventional loan. So 3.5% is the minimum going FHA. It is intended for your primary residence only. You are expected to live in there for at least a minimum of 1 year before you were to move, or rent it out, if you would, and treat it as an investment property. FHA allows for up to 1 to 4 properties to be financed. So it could be single family duplex, 3 and 4plex. So a conventional, on the other hand, it is not backed by the government. Rates do vary. I've seen conventional loans be about 0.5% higher than the FHA, being that they are backed by the government, a little bit more appealing on rates. But conventional, I've seen also their PMI could be a little higher, right? And it all depends on your credit score, your loan to value. There's a lot of variables that can impact what your interest rate will be. But the conventional loans, they're a little bit more strict when it comes to guidelines. Their debt to income ratio requirements are a lot lower, whereas FHA allows for a little bit more buffer, wiggle room on forgiveness on debt. So There is a difference, and it just really depends. There's a stigma on both, right? And I think as a lender, it's important to be able to outline the difference of the two. If you're buying a $400,000 house, let's see what that looks like, side-by-side comparison based on your down payment, based on your your credit score, and all of those things mentioned to see what makes the most sense to you. The thing is with the FHA loan, PMI is on the life of the loan. So even if you have more than 20% equity in the home, until you refinance that house, that PMI is stuck on there. Whereas a conventional loan, it can drop off just by, challenging who you're paying your servicer or who you're paying your mortgage to. Yeah. Where sometimes just an appraisal will help drop that PMI off. And that's what a lot of homeowners experience in these last few years with the amount of appreciation we've been experiencing.
Is that a new guideline that just came out with FHA where you can't get rid of your mortgage insurance premium even though you have the 20% of equity?
No, not to my understanding. I think that's just been their MO.
Okay.
Yeah.
Okay. So I think you make a good point. So when you're buying a home or actually getting a loan for the first time, you have to take a look at both sides to see what fits, right? FHA or conventional. But if you went conventional and you put down 20%, you no longer have that mortgage insurance premium, right? But you're putting more down. So at the end of the day, the question is, do you want to put, pay more up front or pay more on the back end, right?
Yep. And what a lot of people are not keen on is when you are taking out a conventional loan, a lot of the people assume that you need to put 20% down in order to avoid the PMI. There's actually creative ways on how you can, one, either do like a lender paid or a finance of the PMI. So for example, let's just say the private mortgage insurance costs $8,000 for a $400,000 loan. Well, you can actually finance that $8,000 up front. Or you can roll it into the loan. Okay. You can pay it out of pocket. You can split half of it where you finance and pay the other half in the PMI form. So a lot of people, I just want to remove that stigma that you do not need 20% down, because that's pretty hefty in itself, just to avoid a couple $100 payments.
Can you negotiate and have the seller pay for that?
Absolutely. You can negotiate anything, right?
Yeah.
Yeah. So if you're getting seller credit, not only are you able to apply that to any, and that's where having a good agent like yourself, right?
My point is that I was actually teeing you up on this, right? Because normally when we write up our contracts, and right now we're asking for closing costs, and I did this deal right now where I've got $17,500 towards closing costs, or true closing costs with all the fees is only $8,000. But the reason why I asked for $17,000 because I took the additional balance of the $11,000 to do a buy down, right? So those are the things that you can do in today's creative market, and you have to be creative, right?
Absolutely.
But this is not on every single deal, right? When I look at a deal, we got to analyze the deal. We got to find out why the seller is selling, right? What's the situation? So let me give you the story on this one. I knew that the seller was going to move because they're currently under contract on a home and they need the money.
Oh yeah, there's a lot of motivation then. Yeah.
So at that point, there's motivation. But it is a win-win situation because at the end of the day, my client's going to lease it also back to them, no charge, for 60 days.
Wow.
So it's how you structure the deal. But before structuring the deal, you have to understand both sides of the party.
Absolutely.
Right?
Yeah.
As an agent. And the other thing is that you have to have that dynamic team with your lender, like with you, right? Figure out what's going on the financing side. You have to understand the buyer's financial situation. Once you have that, now you can piece everything together and structure the contract, right? So it's a win-win situation for both parties.
Yes, the whole lender-realtor relationship is so important when it comes to working with a client. You want to be able to strategize that solution together. Like, hey, Chakits, this buyer qualifies for $400,000, but only has X, Y, Z to bring to the table. So this is where I need your help to negotiate, right? To your point, whether it is at 17.5. So one, it covers their closing costs, helps buy down their rate so I can get them now within the allowed debt to income ratio. Maybe we'll pay the insurance up front. I'm talking homeowners insurance. Sometimes you got to pay things out of pocket, so what is it going to do for the buyer? Is it going to help them less cash to close? Is it going to help them, to your point, do a seller lease back? So I think that's why it's so critical to have that relationship with your lending partner as a realtor, so that way you can win more business together.
Now, part of a real estate transaction, right, we have fees, which is closing costs, and you have lender fees that's associated with that. What does your company charge?
We are a flat fee right now at $13.95, and we are a direct lender to, or excuse me, we're direct mortgage company, so we sell directly to Fannie and Freddie. So there's no overlays or anything like that, and we're pretty competitive when it comes to rates. So I always challenge people, look, I know I can't win everyone's business, but as a friend, it's always good to just send me your loan estimate. Let me just give it a gander and see if wow, that's a great deal. You should go ahead and move forward with it, or, let's see what we can do. And if we can't help you, let you know at least peace of mind that's
okay.
Good.
So you just mentioned that your company is a direct lender. Okay. What is that exactly, and how does that save the consumer money?
So there's different, you have your banks, right? Your local banks here, whatever state you're in. A lot of times what differs from them is they have limited products, so their pricing could differ from someone like us that specializes in mortgages. We are direct lenders to, we sell our loans directly to Fannie and Freddie, so there's no middleman per se. If you are a broker, someone that maybe is able to charge origination points and they'll pass those fees over to the buyer, we're not charging any origination. Right? You might see it on the loan estimate as origination, as discount points, however that's worded. That's actually what the loan officer is getting paid to do the loan. And so as a loan officer at a mortgage company, our compensation is already built into the loan per se. We're not charging the borrower anything additional. So as far as savings, I think that's what is important. A lot of people, even when you're working with someone, say at a builder, and they have their in-house lender, it might be convenient for them to use that in-house lender because they're sharing, we have all these incentives, we can get you into this rate. But still, I think it's important to compare this someone like a mortgage banker myself or a broker, and really do a side-by-side and say, look, well, you're not really giving me a deal. You charge me more on the price, to basically give me a lower rate, whereas this company is giving it to me less fees and things like that. So it's always good to have at least a option 2 or option 3.
Well, that's a lot of great information that you provided today. So I want to say thank you for that. Also, I see here on the notes that are you part of that nonprofit? What's this nonprofit going on?
Yeah, well, this is how actually we met. I was going to say the last time I saw you was at that dodgeball tournament, for those viewers out there that may have seen that clip. But the ARIA Association, which is short for Asian Real Estate Association of America.
Asian Pride, cuz.
Yeah. But no, actually, I've been a big part of that community. They're a nonprofit. They really help the Asian community. Living in Denver, Dallas, and now this market, I've been an active chair member in all of the cities mentioned. And it's just been very valuable to me to, one, connect with the community. And it just feels good. It is, after all, we don't get paid for what we do. But today we hosted that Builder Expo, where we brought all of the real estate professionals together to have them speak to the new builders in the Valley and help them understand what's the latest inventory and incentives. And I think there's just a lot of value that we can add. We always have keynote speakers, galas, events and social networks. So I really enjoy being a part of that, just because it's always helped me.
Definitely helps your business.
Yeah, it just, I think it's, being a part of the industry, it's just something I enjoy, networking and socializing.
Okay, and how many agents are a part of this association?
Members?
Yeah.
Or realtors? What do you mean?
I guess members.
Okay. So the last count that I recall, which today I was able to sign up personally, I think about 20 people. The last number I was told were right about the 150, give or take. So probably as of today, we're at 175, closer to 200.
Okay.
Yeah.
Wow, you guys are going strong.
Yeah.
And how often are you guys doing this meetup?
We host something every month.
Okay.
So next month, we're going to be having a luxury mixer at the View properties of Christopher Holmes at McDonald's Ranch, Highlands. Is it McDonald's Ranch?
Yeah.
Yeah. So again, it's just, if you're a member, it'll be cool. It just allows people to rub elbows with rock stars like you, which I don't think you're a member though. Are you?
Yeah, I know.
Yeah.
Do I get a
not?
free pass?
I mean, dude, it's $33 prorated from now till July 1st. Come on.
Oh, $33.
And look, how about you
man.
collect all of those $2, $5 donations, and we can round it up and get you dialed in, brother.
She's called me out.
I
hey,
mean,
that's how you know I'm Asian.
Yeah, you save, right?
I'm conservative.
Yeah.
Is there anything else that you want to share with the audience?
Well, we didn't touch on an area that I do specialize in, which is the non-QM space.
Okay, let's talk about that.
Yeah, and I don't know if you're working with a lot of investors, Chakits, where they need this product, but with investors looking to build properties, whether you're a BRRRR strategist or you're new to the game, a lot of people that are limited to the Fannie Freddie Mae guidelines where you're capped at 10 doors.
Yeah.
Non-QM loans, which is short for non-qualified mortgages, it's basically your non-conventional loan. So just know this, that while Fannie and Freddie Mae have their guidelines in place, know that there's other solutions or options. And what I mean by that is if you're an investor and you don't have a paper trail of tax returns, your traditional docs, pay stubs, things of that nature, there are still products out there that if your property is cash flowing, you can qualify for a loan. For example, if you buy a house, the mortgage payment is $2,000, you're collecting $2,500. All I'm asking from you is your driver's license and last 2 months bank statements to show that you have the money to cover the down payment and closing costs. Otherwise, I don't care if you just quit your job or if you're working.
Is there a limit to that? Like how much you can borrow?
The loans for those DSCR products are up to $3 million.
Up to $3 million?
Mm-hmm.
Oh, wow.
Yeah.
And how long are the terms? And how long is it amortized for?
So you can do it. There's a few options. You can go fixed 30 years, right? Is amortized up to 30 years, or you can do, there's some adjustable arm options as well. What I see happening most with these products is if you are an investor, you acquired a distressed property, rehabbed it, you need to then take that hard money loan, which is how most people are acquiring, right? Mm-hmm. Angel funds or what have you. You take that loan and you're going to need to refinance it because usually it's a 6-month or a 12-month term that matures. Yeah. And they're panicking. They're like in a 12% interest rate, 14%. So they need to refinance it into a long-term product. So that's what I see happening. There's a lot of people that are acquiring properties where, Kandy, I do want to get into investment, but I have a lot of money from family, but I don't have a paper trail. So there's just, a lot. I believe every property qualifies for financing. You just got to work with the right lender that knows about the extensive product lines available.
So somebody says here on the comments, prepay penalties and points.
Mm-hmm. Yeah, so typically you can expect anywhere from 1 to 2 points on origination. Those are basically what the broker charges because these are brokered out loans. Meaning, even though I'm a direct lender to Fannie and Freddie, this is not an in-house product, which we are going to start carrying here pretty soon. But you can anticipate 1 to 2% of the loan amount. Prepayment penalty depends. There's like some step-down options. For example, maybe if there's a 3-year prepayment penalty, 3% the first year, 2% the second year, 1% the third year, and then it falls off. Or you can buy out that PP and basically not be charged at all.
Damn, that was a lot of information. I'm like so
Bro,
overwhelmed.
I know. I don't want to burn you out, but yeah,
you didn't burn me out. You didn't burn me out. I was like, wait, what?
Yeah.
I wasn't burnt out, but I was baffled.
Yeah.
So it sounds like some pretty good loans out there if you're looking to buy an investment property. Yeah. All right. So I believe you also have a YouTube channel as well. We definitely want to plug that in.
Oh, thank you, Chakits. I really appreciate it. Yep. Hello, Kandy Katz. Find me. I coined myself as a real estate cheerleader. I'm here to support you guys in any way with my experience. Let me know how I can help you and just happy to connect. So thank you so much for this opportunity.
No, I do appreciate it. One more thing as well. Your Instagram, all your social media sites, plug all that in real quick. And we'll have that in the link in the description below.
Super easy. It's Hello Kandy Katz. That's HelloKandyKatz.
All right, guys, that is it for the show. Until next time, next week, Wednesday at 4 p.m. Pacific Standard Time. Also, if you guys haven't had a chance to subscribe to the channel, go ahead and click that subscribe button. Hit that notification button too as well. And if you're just a fan of the show and you want to see what's going on with real estate life because you're just getting into real estate, check out our second channel, Chakits 2.0. Other than that, until next time, peace.